Hey everyone, and welcome. Today, we're jumping into a really clear, actionable blueprint for tackling the Forex markets. It's based on some fantastic work by Dr. Steven, and it's all about trading with a solid plan, not just, crossing your fingers and hoping for the best. So let's get into it and unpack this thing.
For a lot of people, this is the big question, right? You look at those charts with the numbers flashing and the lines going all over the place, and it just feels chaotic, unpredictable, almost like you're just playing a high-stakes guessing game. And that's a totally normal fear to have if you don't have a system. But what if you could swap out that chaos for clarity? Well, that's the whole idea here. A solid trading plan, that's what makes the difference between just gambling your money away and executing a calculated professional strategy. It's the framework that helps you see the opportunity inside all that noise.
So, what does that framework actually look like? Well, we're going to break down this awesome 6-step blueprint for success straight from Dr. Steven. The best way to think about this is like your pre-flight checklist before you even think about risking a single dollar.
And here they are, all 6 steps right there on the screen. We're going to dig into each one, but just seeing the whole roadmap like this gives you a great feel for the structure. You can see it's a super logical flow. You prepare, then you calculate, and only then do you act. Let's kick things off with phase 1, the setup. This is all that critical prep work you do way before you're anywhere near the buy or sell button. This is you building your foundation.
The first 2 steps here are so simple, but they're incredibly powerful. First up, just pick one currency pair. Seriously, don't try to watch 10 different markets at once. Focus. Then, step 2, you apply your trading strategy to it. What's your system telling you? Is it a buy signal, a sell signal? The whole point is to have a consistent way of analyzing the market, not just going with a gut feeling. Okay, so you've done your analysis, you've got a potential setup. Now we shift gears into phase 2, the calculation. This is where you stop being an analyst and start being a risk manager. And honesty, this is what separates traders who stick around from those who don't. So the absolute cornerstone of this phase is understanding your risk to reward ratio. This is step 3. It's a really simple concept, but it's everything. It just means that before you even get into a trade, you have to ask yourself, how much am I okay with losing on this idea, and how much could I realistically gain if I'm right? A great rule of thumb is to aim for a ratio of at least 1 to 3. So for every single dollar you're willing to risk, you should be aiming to make at least $3 in profit. Think about that for a second. A rule like this means you can be wrong more often than you're right and still be profitable over time. It's a total game changer. So, once you know your risk-reward makes sense, you can move on to step 4, finding your entry. And there's a reason this comes after you've done the risk calculation. You have to know if the trade is even worth it before you start obsessing over the perfect price to get in. This step is all about pinpointing that exact level where your strategy says, okay, now's the moment. And next up, just as important for managing risk, is step 5, choosing your lot size. This basically decides how big your trade is. Now, the key here is that this isn't some random number you pull out of thin air. The size of your trade has to be based on your total account balance. If you have a smaller account, you use smaller lot sizes. Bigger account, bigger sizes. It's how you make sure one bad trade can't knock you out of the game. All right, we've made it to the final phase, the execution. You've done the analysis, you've calculated your risk, you've found your entry point, and you've picked your position size. Now it's time to act, but not based on emotion. It's all about disciplined action based on the plan you just carefully built. And that leads us right to the final action, step 6, execute. When the market finally hits that entry point you identified back in step 4, you pull the trigger. No hesitation, no second guessing, none of that. You just have to trust the homework you did when your head was clear and rational. Now, this right here is probably my favorite part of the whole blueprint. After you execute, the instruction is to leave the market for it to produce the result. This might actually be the hardest step for a lot of people. It means you don't mess with it. You don't panic. You don't close out early just because you're nervous. You set your plan, and now you have to have the discipline to let it play out. So when you step back and look at the whole thing, you start to see that this isn't just a to-do list, is it? It's a complete system for building a professional trader's mindset. It's all about shifting from reacting emotionally to executing a plan methodically. And this really is the heart of it all. This blueprint guides you into a rhythm. It starts with careful analysis, which leads to calculated risk management, that then allows for disciplined execution, and finally, it demands strategic patience. See how each step just builds on the one before it? It's a beautiful thing. And of course, we absolutely have to give full credit where it's due. This whole blueprint and the entire philosophy behind it comes from the incredible work of Dr. Steven over at Stevens Trading Hub.
So, we'll leave you with this final thought to chew on. After going through this blueprint, does it maybe change how you think about trading? Is it possible that the most important part of any trade isn't whether it wins or loses, but the quality of the plan you built long before you ever even clicked the button? Something to think about. Thanks for tuning in.